Shawn, clearly this is something we can expect, right? Given that there's essentially an embargo between U.S. and Chinese businesses, there's not going to be a lot of shipments.
Absolutely. Look, I mean, this is the economic damage of the tariffs that's playing out in real time. And we're seeing this in what's happening at the docks in places like Los Angeles and Long Beach, where we know bookings are way down, that they're just not seeing the same volume of containers that they had been seeing coming in from China. So this is the first sign, really, of the impact on trade of these tariffs. But, that really captures only the first few weeks of the tariffs, and they're going to be around and with us for a while.
Shawn, you wrote that even a dramatic de-escalation is unlikely to ease much pain for American consumers. So you look at that rate that could go down to 80% when it comes to China. But if you look at the Chinese economy as well as the U.S. economy and compare them and the type of pain that they're experiencing as these talks are hashed out, what does it say about the relative power in these negotiations?
Look, I think both sides are going into this weekend thinking that they've got the upper hand. But what we've seen pretty dramatically play out over the last month is just how dependent the U.S. economy is on imports from China and how damaging, you hear this from businesses almost daily, it feels like nowadays, how damaging losing access to those imports is going to be for the U.S. economy. So, the Chinese have a pretty strong hand here. On the other hand, China is still an export-driven economy. It's not dependent on domestic consumption like the U.S. And so if its exports to one of its main overseas markets are taking a hit, that's clearly going to hurt it as well. I think the key point to remember here is even if we get a de-escalation this weekend, even if tariffs come down, and the number that I was hearing in recent days was somewhere below 60%, that is still an astronomically high tariff level in historical perspective, and that's still going to do significant economic damage. In fact, it's unclear that if you get to 60%, if you get to 54%, even if you get to 30%, that is really going to solve the so-called empty shelves problem that we're thinking about more and more, and that is consumers getting worried that losing access to Chinese imports means we're going to be back to the kind of supply chain concerns that we saw during the pandemic, and some of that economic angst returns, and we slow down and kind of buckle up because these things aren't going away.